Right now, 95% of crypto traders are dumping their bags at a loss, panicking over the brutal 2026 bear market, and swearing they'll never touch crypto again. The crowd is exhausted, crushed, and fully convinced that crypto doesn't work anymore. But while retail rage quits, institutional whales are quietly scooping up foundational infrastructure at prices that will look absolutely insane in a couple years. Bear markets aren't endings, they're the ultimate fire sales. Today, I'm breaking down why I'm aggressively buying HBAR right now, ignoring all the market fear and apathy. 5 rock-solid reasons why I'm holding this coin through the next cycle and why anyone who skips this video halfway through will regret it hard when the charts flip. Crowd exposure. Let's be real. The crowd always does the same thing. Buys the tops, sells the bottoms, and finds new excuses every cycle why this time was different. If you're watching this in 2026, you're at least trying to think instead of just reacting to red candles. I'm not going to lull you with hodl and pray mantras. I'm showing you why Hedera fits into the future architecture of finance and logistics, while most meme and one-shot projects stay dead liquidity graveyards. Today you either get why smart money flows into networks like Hedera, or you'll be the guy begging the market for one more chance to enter cheaper next bull run. Reason 1. Corporations are in serious. Hedera stopped being a hobbyist toy and became real transportation infrastructure for global corporations. When FedEx, of the world's logistics monsters, officially joins, that's not just news. It's a sanity check for the entire blockchain sector. Companies with that kind of history and market cap don't tie their name to a network without serious due diligence better than any crypto blogger could dream of. FedEx didn't just buy some tokens just in case. They joined the governing council to run their own node, vote on decisions, and build real digital processes on Hedera. This isn't speculation anymore, it's infrastructure commitment for years ahead. While small traders argue in comments about today's hot meme coin, global corporations quietly roll up sleeves and integrate into networks that actually work in the real world, not just coin market cap rankings. Reason 2. Predictable network economics. Most crypto projects still operate on whatever happens logic. Gas fees are pennies today. Tomorrow you pay airplane ticket prices for one swap. Fun for crypto natives, total chaos for business. Hedera plays a different game. Transaction fees are designed to map to predictable USD values, not dance around based on mempool congestion. Sounds boring until you scale it up. Imagine a company processing millions of transactions daily. The difference between roughly and exactly on fees equals millions in annual savings. For those companies, Hedera isn't just another blockchain, it's a reliable financial tool. That's why I look beyond where cheap and fast slogans to whether the network is actually enterprise ready. Hedera's fee economics align closer to traditional finance than chaotic altcoin dumbfuge long-term advantage. Reason 3. Technology foundation, not marketing. When markets rip bullishly, nobody cares how the network actually works. Just make the token go up. But bear separate real tech from vaporware presentations. Hedera runs on ABFT consensus zone of the industry's gold standards for security and resilience. Even under complex network conditions with malicious nodes, it reaches honest consensus. Transaction finality in seconds isn't abstract, it's concrete user experience. You sent it, done, no maybe reorgs or endless waiting. Nice for DeFi speculators. Mission critical for banks and logistics. I don't buy Twitter pictures. I buy network properties. Security, speed, finality, predictability. Long-term winners are unbreakable under load or attack. Hedera belongs in that category. Reason 4. The world is slowly getting organized. Many still live in 2017, hoping for eternal Wild West without rules. Reality check. Governments, regulators, and big funds are here to stay. It's not will crypto be regulated, it's who and how. Laws like the Clarity Act move toward ending the limbo, clearly defining security versus commodity versus payment instrument, S. Clearer classification, easier institutional entry. Like it or not, institutional billions won't touch assets that regulators could shut down overnight. Hedera's public counsel, Fortune 500 partners, and enterprise focus make it the safest bridge between crypto and TradFi. I'm not betting on anarchy. I'm betting on infrastructure that coexists with laws while keeping DLT advantages. Future winners balance tech with real-world jurisdiction, not most decentralized hype. Reason 5. Tokenization, RWA as main narrative. If past cycles rode DeFi and NFTs, the next will likely be real-world asset tokenization. Makes perfect sense. Too much capital stuck in illiquid assets, real estate, bonds, business equity, all begging for digital twins. Hedera was built from day one for corporate cases, complex legal structures, ownership tracking over farmer approvals, perfect launchpad for tokenized assets. Picture markets where real estate deals, supply chains, document flows, and B2B settlements run through one stable, fast, verifiable layer. Even a fraction of those flows on Hedera creates organic HBAR demand from real usage, not pumps. I'm not saying all RWA magically migrates tomorrow, but the network architecture and partners clearly move that direction enough for me to bet HBAR captures tokenized world share. Risks I actually acknowledge. Important reality check. This isn't to the moon only fairy tale. Real risks exist. First, markets can stay depressed far longer than your psyche can handle. Great fundamentals don't guarantee price action tomorrow. Second, competition. Dozens of loans, L2's promise, revolution. Some will steal market share. Hedera must fight for its slice. Third, corporate adoption moves slow. Pilots, integrations, internal politics, not crypto startup speed. Real results may take years. If you can't stomach these risks, HBAR probably doesn't belong in your portfolio. And that's fine. Key is never entering blind to what could break. How I'm buying HBAR in 2026. I don't play catch the exact bottom roulette. My approach is simpler, more realistic. I break purchases into stages, spread over time. Average entry price discipline beats perfect timing. Bear markets reward marathon runners, not sprinters. I predefine my thesis broken levels. Network stalls, major partners exit, real use cases stagnate, regulation turns hostile. And I accept I can be fundamentally right but wrong on timing. Crypto reality. Markets stay irrational longer than you stay solvent. Position size, risk management, time horizon matter more than the buy button. In the end, HBAR isn't just another altcoin in my portfolio, it's a bet on infrastructure that's actually changing the game for business and finance in 2026 and beyond. While the market panics and dumps everything indiscriminately, I see Hedera methodically building partnerships, strengthening its technology, and preparing for the era of tokenizing trillions in real-world assets. This isn't about quick tanks gains tomorrow, it's about a position that could deliver serious outperformance 12-24 months from now for those brave enough to enter against the crowd. If these 5 reasons resonate with your market view, pause, do your own homework, and decide for yourself. Crypto isn't about blindly copying trades, it's about understanding where real value gets created. Key takeaway. Bear markets filter out weak hands and reward those who think in years, not days. Be in that category. Like if this hooked you, share your HBAR thoughts in comments, and subscribe. More breakdowns coming on infrastructure coins quietly gearing up for the next bull run.